Good morning, traders. It's 8:01 a.m. Chicago time on Monday, the 12th of February, 2024. Thanks for joining in on episode number 2621. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, if you recall, Friday was the last day for the pre-market summary sheet. Friday, there was no trader bite. I'm sure you're hearing in my voice that I'm not in the best shape I can be today. I lost my voice actually over the weekend. On Saturday, I sounded like a whale that's been harpooned or something. But it's slowly coming back. The overall market sentiment today is mixed, and lots of holidays today, lots of closed markets today. Just be aware that China, Taiwan, Japan, Korea, Vietnam, Singapore, Malaysia are all closed today. As a result, we're seeing very little activity in the markets. Also, the Saudi energy minister says they have spare capacity if needed. They've been criticized that their spare capacity is at about 1.5 to 2 million barrels per day, or actually 1 to 1.5 million barrels per day. They say they can ramp up as needed, but it's not needed. Saudi Aramco CEO says he doesn't agree that there will be a peak demand for oil anytime soon. Expects the demand for 2024 to be around 105 million barrels per day. Uber and Lyft drivers plan a strike on Valentine's Day. So if you're in one of the 20 cities they're going to do that in, if you're in one of the 20 cities they're going to do that in, just be aware that there's likely to be a strike and no way to get around. They're demanding better pay, better split, so on and so forth. Gilead to acquire CymaBay for $4.3 billion in stock. Gilead's pretty big. And then Tesla lowers some U.S. prices. Cisco is planning layoffs in its low-growth sectors. It's focusing its resources into the high-growth segments of its production. The S&P so far is balanced, 87,000 contracts, really, really low volume, completely sideways. Inventory is 58% short. The range is 7.5 points. 7.5 points. Point of control at 50, 43, 50. We have not given up any of the prices near the high. Keep an eye on the dollar. The dollar's been climbing higher, pushing gold lower, or putting pressure on gold, silver, copper. And we're seeing a response in the treasuries as well. Again, the dollar is just putting a lot of upside pressure. This week, since it's Monday, be aware that tomorrow we have the unemployment rate out of Great Britain. We have the ZEW economic sentiment out of Germany. That's a mover. Most importantly, we have the U.S. inflation rate release, as well as core inflation. Those will be at 8:30 a.m. Wednesday, we'll get inflation out of Great Britain, GDP growth out of Japan. Thursday, we'll get Great Britain's GDP growth and GDP retail sales from the U.S. And then Friday, we get retail sales out of Great Britain, building permits in the U.S., but we also get PPI on Friday, another mover, and Michigan sentiment, also another key release. So that's the week. We have pretty well distributed planned releases, with inflation being the crowning release for this week. So that's where that stands. Let's take a quick look at the charts and where we are. I'm going to try to keep this as brief as possible. Part of the reason we are getting rid of the summary sheet as it just added another 7 or 8 minutes to the broadcast. Here's where the S&P is on a composite basis. These bars represent RTH bars for the day. And as you can see here, we climb up and then consolidate and push higher. And what we've done overnight is we've held basically the extreme of Friday, which was a rally. Friday ran up from about 50.16-ish to about 50.50 or so, 50.48. And we're currently trading at 50.42. And what this says is the market has not successfully found sellers. So the expectation, as you well probably could guess, is that sideways, waiting for the market to have enough energy to break through the 50.50 and push higher overnight. So the overnight session didn't breach anything from Friday. So today is likely to be just a kind of a sideways, pretty nondescript type of action this morning, expecting a lot of chop and just sideways action. Same thing for the NASDAQ. The NASDAQ has successfully taken out its 18,000. The 18,000 was a support this morning. We pulled back to 18,003, and we've squeezed and pushed through, and now we're holding the upper end of that distribution, not seeing any signs that sellers are starting to recover. Crude has pushed into the 78 a while back, pushed down into the 71. It was expected, once this day was put in, it was expected to get right back into the 76.20 area. It successfully did so, and now we're pulling back a little bit. Crude is trading lower. Crude actually took a bit of a spill right before the open. It's trading in range of Friday's range. It's trading on Friday's lows. Settlement at 76.84. And crude seems to be running out of steam to the upside as well. So what crude is doing is it's creating a bit of a pennant type of structure. It's kind of putting in lower highs, higher lows type of thing. So it's consolidating, and it's doing so above its high volume areas. Here's the S&P on a profile basis. So we had those 3 days last week where Monday, Tuesday, we've overlapped Friday's big breakout. And I had talked about and warned that we are just not seeing this market back off. It is not finding or properly auctioning for sellers. And what that means is it's got to advertise higher prices. It did so on Wednesday with a gap open, a small pullback that didn't really push into the 49.78, which is where it is expected to test on the way down if it was weakish. And then it ended up finishing at the high the next day, completely Gaussian, completely bounced. Thursday, but it finished on a funny looking neutral day extreme on Thursday. So if we look at this particular profile, it didn't really do anything but challenge the high. So we've got a weak top here, a weak top. This is a weak high. So the idea is it's very likely to run up from here. So we pulled in some energy on this day, and then the very next day we opened right at the double top at 50.20, pull back a little bit to value high right here, and then boom, explode to the upside. It took it half the session to kind of squeeze through the IB. A lot of overlapping bars on Friday. A lot of people expressed frustration and just were discouraged by Friday's action. We'll look at it on the active the active chart, but again, hindsight's 2020, and I'll talk about today, which is not hindsight. Do not expect anything special today. It's going to be more of the same with high confidence. We're not coming off of the highs, and the market's in rally mode with the VIX falling, ranges collapsing, volume collapsing. You're going to get overlapping bars, lots of false signals, and then folks getting emotional about their trades, and then basically just throwing away a big portion of their account because they're fighting what the market is doing. So you can see on Friday, we finished pretty good. We had a multi-distribution day, pretty active price discovery. We finished at the upper end of the range. We almost made it to the 50-50 mid-century, missed by 6 ticks. And then this morning, we're opening right up against the volume point of control. This is where volume profiling stands out. We can see really where the volume is, whereas the market profile is pretty blunt. We could see that the market's actually trading in the upper distribution. So we're opening in balance. So the expectation, again, is more of this. There's just nothing to price in. There's not much to price in at the moment. Okay? So that's where we stand. Again, sorry about the voice. It's just, yeah, I got pretty sick there. So here's crude. Crude is very interesting. On Friday, we just basically parked ourselves right on top of this. If you recall, right in this area, there's this MC point of control, which was down here, 76.50. If you recall, the cutoff was 76 and 75.50. We're sitting right on top of here, and then Friday just built a big fat point of control right on top of balance. It's loving these prices right now. The market fell off this morning, but is recovering. And so the key target right now is the point of control. If the point of control doesn't hold, then we're looking for settlement. But I'm not expecting much more from crude. Coming in from below like it has, with the range extension down on Friday, it's likely to run out of pep as it pushes into that 76.80 area. It's expected to kind of peter out and just kind of hold sideways. Not much to play with there on crude, although it's a little bit better than what we're seeing across the board. Here's your S&P. Look at this S&P. We open, we test down, test up. That's our opening swing right there. This is our opening swing. We remain in the opening swing, and then we finally bust through. We have a quick liquidity check and reversal, pull back, and then from there, look at this terrible sideways, overlapping, every bar overlapping, same prices being traded over and over and over. We finally break the IB right here, and what do? We just overlap and overlap and overlap and overlap. Pull back to the RTH mid twice, and then once we break out again on what this is basically a W shape here, a W pattern on an upward skew. Once we break that, we have overlap, 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 overlap. So if you're trying to get long this on pullbacks, you got plenty of pullbacks, but the pullbacks look pretty terrible. They looked like it was done every single time, and it's just really tough to hold on to that. And then we finally push into the close. It does break down a little bit, and then from there it just goes sideways. There's no follow through. We're not seeing the usual impulse, pullback, and then continuation. And so this is the kind of environment. This is the kind of environment that just gets you so agitated. Notice these numbers here, the volume going off over time and the ticks going off over time. These are usually in the 200 to 300 Uh, they've been sitting in the 50, 30, 10, 70, 30, 50. Like, it's just so dead. The only thing that I see moving nicely was crude right here. We had this big drop and then it recovered on the open. So right before the open, somebody just mashed the bid and pushed to extend the overnight session down and then ended up reversing and coming right back. So we're coming right back into Friday's point of control as mentioned earlier, right? So this is working itself back to the 76.84 in crude. So crude appears to be working its auction pretty good today. The other product of interest is gold. So as the dollar's been pushing up, gold has been pushing down. The dollar's been putting a lot of pressure to the upside. Gold is doing the sell, consolidate, continue. Lots of zippers, lots of areas to lean against, in my opinion, in gold. Again, you can always trade the MGC, the micro gold, in there. That's what I'm going to leave you with today. Notice also with gold selling off, the delta is positive. This thing is, as it's pushing off, it's doing so on bids being pulled rather than bids being hit, or on as bids are being hit, the offers are being lifted even more on the way down. So as the market's pulling down, we seem to be seeing aggressor buyers, and that's what causes the cumulative delta to be positive like this. This is suspect behavior, very suspicious behavior here. You have to stick to your bigger picture levels as opposed to trying to trade off of a small time frame chart like this. You got to make sure you're leaning against something real in order to take a trade. The only trade I've seen so far in this thing is the break of the prior low. So this is a standard setup, break of the prior low, pull back, consolidate, and then finally break to the downside. That's it. So if you're trading the ES, I would say you really need to wait things out. It's just not, in the ES, if you look at my active chart, normally it's a 1 tick by 8, it's down to 1 tick by 6, may go down to 1 tick by 4. And when we do that and we start to bring our charts down, and the periodicity on our chart down lower and lower and lower to see structure, this is troublesome. This is trouble. Because you're trying to find something to trade. And if you're going to a smaller time frame, you're trying to expand or zoom in. And if you zoom in enough, you may get trades that only move 2 ticks. The risk reward goes upside down. It's much better to start getting comfortable trading something else rather than sticking with the ES. I know a lot of people don't like to hear that, but that's just how this thing is rolling. Okay, NQ, pretty decent moves in the overnight session. It's also in a grind. Let's not kid ourselves. It's still sitting on yesterday's or Friday's point of control and settlement. So we haven't really accomplished anything overnight. I'm going to leave you without scenarios because I just don't see this as a good trading day. Again, most of Asia is on holiday, and I'm not expecting the volume to go nuts as the market opens. It's just very likely to be a choppy day. Okay? Good luck today, and I'll catch you tomorrow morning. Take care.